One of the demographics in Dubai is that the local population, it contribute about 10 to 11% of the total population. So it's about 85 to 90% foreigners, and the largest population is the Indian community, contribute close to about 25% of the total population. Hence, one of our largest product is the Indian rupee contract. We were the first who started the Indian rupee contract globally, even ahead of the onshore National Stock Exchange, the Mumbai Stock Exchange, or BSE, and MCX SX. Yeah, so we started in 2007, where part of the participation, and it evolves. Yeah, part of the participation, trading India and US market, where they lay off their currency risk on our side. So during that time, we saw that our volume came in the evening time in Dubai, which is the US trading market. So our trading hours is quite long, from 7 a.m. to midnight. 17 hours trading. We have 2 shifts, making sure that our time zone is covered almost 3/4 of Asia timing, full European timing, and then full US trading hours. I think that is the beauty about Dubai, besides the main thing, which is tax-free. Yeah? So whatever I earn there, I get whatever without tax. Okay, coming back to the Indian rupee story, the product itself enable us to wrap around different new products, different new customers, where we are able to introduce different new ideas to the market. I think one of the main things for us is innovation. Yeah? 2 years ago, we were the first exchange to launch the Indian single stock futures. At that time, it was very hard. Primarily, the equity market it's somewhat onshore, and repatriation of funds is always a big key challenge. And the other thing is that at after market close, they look at ADR and GDR to be able to hedge or trade in the evening hours. So last year onwards, we saw that there was a massive liquidity surge on our product suite, and it increased by probably, I think, 50 times from first launch. Yeah. Now, there's another thing that we wrap around. We have 4 product quadrants. The commodity side, we have 2 main focus. One is on the precious metal side. We have the energy contract, we have WTI and Brent. We also have the currency suite. We have 11 products, 11 different currencies, including G6, which is getting very, very active. We have the equity products, equity index, and 59 stock futures contract. And of course, these are the 4 main participants. Last year, we had a breakthrough. I think it's very, very challenging, but we managed to pull it through, is to work with the Shanghai Gold Exchange to launch the futures contract on DGCX. Yeah. So if you have anything, you can talk to Philip in Thailand, and I'll be around. Thank you very much.
Thank you very much, Mr. Meng Chanshu, for your great summary of the opportunities, not just in the Middle East, but also in India. Next, from TOCOM, the Tokyo Commodities Exchange, Mr. Ryoichi Seki, Senior Vice President of Business Development.
Okay, thank you for the kind introduction. I am honored to have the opportunity to participate in this wonderful event and meet all of you here in this room today. And I would also like to congratulate Philip for having this wonderful event. Philip is one of the largest brokers at TOCOM. connecting their worldwide customer base with the Tocom products. So we really appreciate their cooperation. I would like to briefly touch upon what Tocom is today. Tocom is the largest commodity derivatives exchange in Japan and one of the largest exchanges in Asia, which are open to participants outside of its own country. We deal with physical commodities, including oil, precious metals, rubber, and agriculture products. Our gold contract is the most liquid in Asia, accessible by international traders. Our crude oil is a leading derivatives market for Middle East crude oil. And our rubber is a global benchmark for natural rubber. We have been reaching out to players outside of Japan. Back in 2009, we had around 10% of trades coming from overseas, but now the share has reached 50%, so half of the trades is actually coming from overseas. There are many factors behind this, like upgrading training system, expanding training hours to include night session, providing functions, meeting the needs of global players, and obtaining regulatory approvals from major financial centers. Our priorities in 2018 is to list 2 new products. One is a rubber contract. It is technically specified rubber or TSR20 futures. Tocom has a long history in providing rubber contract. Our exchange was established by a merger between several exchanges. One such exchange was Rubber Exchange. And since those times, rubber contract is around for almost 70 years. And the Southeast Asian producers, including Thailand, has been using Tocom RSS sheet rubber prices as a benchmark. Recently, there's a shift in rubber production, and now TSR block type rubber is widely used, and the amount of purchase, export, and import exceed that of RSS. So given this change in market structure, we've been discussing with rubber participants to list TSR in addition to the existing RSS contract. We aim to list this in September 2018. This will be denominated in Japanese yen, just like our RSS contract, but it will be FOB Bangkok, not Shift Japan, which is the first time for us to offer such delivery terms. So we would like to make our delivery procedure in line with what the commercial practice in this region. The other product is electricity futures. It's a power futures contract. Liberalization is happening in Japanese electricity market. The price of electricity used to be determined by the government. It was kind of a public utility charge. But deregulation is taking place, starting from large industrial usage, factories, buildings, and in 2016, retails, like small shops and residential sector has been liberalized. So individuals, like myself, can choose the company in which to buy power based on the fee schedule. As the scope of the deregulation on electricity prices broadens, the impact of the price fluctuation becomes increasingly big when comparing with the days of the fixed prices. So spot market for electricity is there, and it is improving. And nowadays, a certain percentage of power transaction is done through spot market. So there is a need for companies like newcomers like PPS or big existing electric power companies to hedge the price fluctuation risk. So what Tocom would like to do is to provide a place for risk hedging for that purpose. We would also like to provide a marketplace for traders seeking investment opportunities as well. Actually, we are receiving many inquiries from overseas traders and market makers. So I think that's it for me. Thank you very much.
Thank you very much, Mr. Yoichi Seki. I think Thailand being the major exporter of rubber in the world, that's definitely something that everyone keeps in mind, alongside the opportunities of investing in the Japan economy. Next, from the Korean KRX Exchange, we have Mr. In-pyo Lee, Head of KRX Derivatives and Global Market Development.
Can I go up there?
Please. I have a cheating paper, that's right. But somehow I was so excited. I don't know why, but I found out this morning it is first time in Bangkok without my wife. So this is the reason. Hi, this is purely from Korea Exchange. Because of time constraint, I'd like to briefly explain about Korea Exchange first. Korea Exchange operates on stable product types and more than 25,000 symbols. Equity, fixed income, ETF, ESW, warranty, commodity, and 22 types of derivatives, and even OTC as well. In addition to providing service to market infrastructure and data, we also provide service for clearing and settlement. So once you open an account in Korea to trade Korean financial product, and you may enjoy the one-stop service through the Korea Exchange. We also have 2,200 listed company of market capitalization of the almost $2 trillion US. And our trading session from 9 a.m. through 3:30 p.m. for equity and 3:45 p.m. for derivatives. And the night session is starting 6 p.m. through 5 a.m. next day, from Monday through Friday. So eventually you can enjoy the 24 hours trading. And let's move to the flagship product in derivatives area. So our main famous flagship product is Kospi 200 futures and 200 options. 200 options was used to be number one in the worldwide in equity option, but now become the number two. But last year you may see 45% increase. The daily average volume is 250,000 contracts. And Kospi 200 options reached more than 3 million contracts per day. And our rising star single stock futures, we have more than 130 listed companies like Samsung, LG, and Hyundai Motors. This increased a lot last year, reached almost 1.5 million. And Costa 100 futures, this is highly potential. You have to see this year. And this is going to be a hard one for this year. Besides those four products, we have FX, USD against the Korean won futures. They're seventh largest FX derivative in the world. Also, 3 years Korea Treasury bond. That's the reached more than 100,000 contracts per day. And Korea Exchange is also foreign-friendly market. In the Kospi 200 futures and options, foreign sectors occupied more than 50%. 50% is dominated by foreigners. And single stocks and KTB and FX, this reached almost 30%. So I proudly say this is the really foreign-friendly market for everyone, so you may think about it. This what we did in last year, I'm just gonna skip that part. But a good thing is our regulator changed their stance from prudential to market-friendly, trying to deregulate. And we opened the Singapore branch office last year to expand our territory. And coming up to this year, of course, I said that the Kosdaq 150 futures is going to be our rising star, and we trying to list more options. And Kospi 200 weekly options is coming up, and more single stock futures and ETF. I'll tell you later how we make opportunity using those derivatives. And I briefly touched about last one was we have a global linkage with the CME and UX, those Kospi 200 futures options and FX market. So eventually you can enjoy the 24 hours using the other exchange. So it's time to buy Korea through the Korea Exchange. Thank you so much. Thank you very much, Mr. In-pyo Lee. I think we've seen the potential of markets that maybe we otherwise won't normally consider, such as Korea. Finally, I would like to invite Mr. David Gibbs from the CME Group, Director of Market Development, to give us an overview of the largest derivatives markets in the world.
Thank you. Thank you. And on behalf of CME Group, I'd like to welcome everyone to this wonderful conference. Also echoing my colleagues in congratulating Future Philip Investments on this 20th anniversary event. We're delighted as an institution, and I am very proud personally to be included in this panel amongst so many wonderful peers from the region and a pantheon of great exchanges from Asia represented. Group represents asset classes covering bases from agricultural commodities and industrial commodities to precious and base metals, foreign exchange contracts, as well as interest rates and equity index products. 2018, as measured from one of our legacy exchanges, is our 170th year as a regulated futures exchange, and we're looking forward to at least another 170 years of operation as well. 2018 has the promise of bringing lots of market activities to us as a global industry, but also to us as a private business. Our asset classes are broad and diverse, and we're truly a global 23-hour day trading operation. Our fastest growing segment in terms of revenue generation is coming from Asia. Our liquidity growth in this time zone is the fastest growing of all of our areas around the world, and we would expect it to be so again this year. We have increased our level of personnel, both in our offices in Singapore and Hong Kong, but also on mainland China, and have recently opened a regional office in Sydney, Australia. Our commitment to this region is absolute, from our people on the ground all the way to the executive suite in Chicago. So I'm very pleased to be a part of this panel and a part of this event today, and will be available to offer any questions or answer any questions I can regarding to our products and services as we continue to work through today's event. Thank you so much.
Thank you very much, Mr. David Gibbs, for giving us a great overview of the many products available in your exchange. Now, before we start the Q&A panel, let's have a quick look at our Slido poll. We would like this event to be relevant to all our audience, and therefore we would like to cater it according to what's most important to you. Great. So I guess that's not a big surprise. Bitcoin and alternative investments is a top choice, followed by China and Asia. Now we will cover all these areas, and as everyone event, there'll be a seminar specifically on Bitcoin as well. Great. Now let's go into the Q&A sessions. Now this Q&A session is basically done by curating all the questions that we've gotten from the market as well as our audience, so that our expert panelists can give us their opinion and their views on the market. As we know, China is a huge area of investment right now. In fact, at a World Economic Forum currently going on in Davos, China is slated to account for over 35% of global growth in the coming years. Here in Thailand, the impact of China's investment is clearly felt. With over 900 billion in planned investments to the One Belt, One Road initiative, Thailand alone gets over 46 billion in terms of the Eastern Economic Corridor investments. I'd like to direct our first question to our expert in the China region, Mr. Roger McAvoy, to provide his views. On the one hand, China's pace of growth is astounding. On the other, should investors be worried about the increasing debt load? Please.
Thank you. It's a great question. So I guess if you look at China and you think about how it compares to other economies around the world, the reality is that China's long been a managed economy. So a lot of the debt that they owe to themselves, very domestic, very different relative to many of the leading economies in the Western markets. So China still, it's the number 2 largest economy in the world. China is also the largest contributor to global growth, something like 40% versus the US, which is, I think, around 16%. And I was reading in a few different industry reports, and so I pulled out a few data points maybe I can share with you. When you look at China, again, as a managed economy, they're coming out of the 19th Congress with a very clear and focused plan around how to continue to grow the economy and to create opportunity over a long period of time. And a few things stuck with me that may be of interest to your clients and to the audience here as you think about how you want to access China and potential opportunity to take advantage of that over time. So the first thing, if you look at, and Citibank did do a nice report on, as many have, a summary of some of the key points coming out of the 19th Congress. And one in particular focus area for China is really to continue to accelerate their financial reforms, where Citi forecasted, for example, they think the size of the China market will equal that of the US by 2025, which is only a few years away. Secondly, the bond market is expected to triple to something like $38 trillion, while the stock market cap should grow to $31 trillion. Bank assets that sit in China are enormous. Something like over $60 trillion sit within just bank accounts waiting to be deployed as local Chinese investors, mainly a retail market, think about how they start to get access to the global markets. So that's a big thing that sort of stands out. And if you think about where Hong Kong Exchange sits as a gateway into China and for investors out of China through our mutual market access, things like Stock Connect, which is a closed loop mechanism that allows Chinese money to come out of China into Hong Kong to access Hong Kong and international product, never leaving the closed loop of RMB control so that on the sale everything does go back to China. So it's a very secure mechanism for China to have continue to have a managed economy, but give their local market, both institutional and retail, access to international product. Secondly, there's a focus in China around how to go to greater quality across the industrial production chain across many segments or sectors of where they're leading producers. And there's a theme around Made in China 2025. So again, I think you'll see a continued focus on how going from sort of quantity and production to really quality of becoming a more attractive marketplace for consumers internationally to access that market, and obviously domestically to start to grow the domestic consumption. Thirdly, and you mentioned Belt and Road, it's a really long-term plan to grow both the trade and investment liberalization, opening up China to foreign participation, both to come into that market, and you've seen a number of fund managers now get access to open up their own asset management companies in China, as well as to develop free trade zones and economic corridors. So again, really think about how they can facilitate ports of entry into and out of China through the whole Belt and Road Initiative. So again, very managed economy, very focused on an action plan to continue to be relevant going into the future. And if you look at the capital markets, the bond market in particular opened up in 2010. Today, international investors hold something like 2% of the China bond market, relative to international investors' holdings of other bond markets around the world. There's substantial opportunity for greater access into those markets, into the bond market. Furthermore, China is not yet included in a lot of the bond indices that global money tracks. So although Bloomberg and Barclays have included it, and Citibank has included it in a few of their indices, JP Morgan's EMBDI and other indices have not yet included China in the bond market. And so there's a tremendous opportunity there for capital to continue to go into into China. And finally, with equities, if you look at what's happening with MSCI at 2 stages this year, China will now be included in the EM indices. Again, a small number at the start, but really a tremendous upside in terms of the longer-term potential, particularly as China gets full recognition into the EM indices over time. So, does China present an issue with debt and other things? I think that's really a question that everyone has to answer individually. But if you look at the initiatives and the pace and the growth and the progress of China, I guess my view would be with China as a bull longer term, and I would certainly think about those initiatives in the background when thinking about it. If you look at even, there was an article just last week, a number of hedge funds who have long been sort of short China, thinking that's an issue, have reversed their trading strategies and gone back to either neutral or starting to take a tilt toward China. So I guess some things to consider. Finally, I'll just add, if you look at China in terms of, again, coming out of this 19th People Congress, there was an emphasis on a few areas of research and development, which I think are interesting when you look at, again, how you might want to think about accessing China and opportunity. A few points of R&D which came out as focus areas for the Congress were around IT, artificial intelligence, Internet of Things, big data, cloud computing. None of this is a surprise, but if you look at Shenzhen as sort of the Silicon Valley of the East or the West, I'm not sure where we are in the East-West part of the world these days. I've been in Asia for 17, 18 years, and Silicon Valley in Shenzhen, Shenzhen is significantly bigger, and the activity there is tremendous. Advanced manufacturing, focus on robots and laser technology, aerospace, aircrafts, marine technology, hybrid seeds in agriculture, modern agricultural practice, and biotech and biomedical, which centers around things like stem cell technology and bio and pharma and technology. So again, a few things that really struck me around China, and I think when you think about China over the short, medium, and long term, seems to me like it's a pretty good, things seem to be under control. But again, everyone can draw their own assessments. Hong Kong Exchange, really our goal is to be the gateway to help international investors get access to opportunity, both in the cash market through mutual access, as well as in the derivatives market, where you may want to have exposure or hedge or take directional bets across multiple asset classes, and eventually building out our listing regime to hopefully become more competitive to help you take advantage of some of the newer innovation economies. Thank you.
Great. Thank you very much, Roger, for your overview of why we should invest in China. On the same topic, I'd like to pose the next question to our panelists from Singapore. Singapore, the large market, is on everyone's mind. India, through the Nifty. Perhaps our panelists from Singapore can provide an overview on why investors should add China and India into their investing portfolio.
Thank you. When you think about China, these are the two large economies, and the prospect for these two markets to grow is markets. Now, the Chinese market is not easy to understand, because when you read reports, you will see things like what we call the ABCD of Chinese stocks. So you have A shares, which are the shares listed on the Chinese exchanges. You have H shares, which are listed on the Hong Kong exchange, that have a Chinese sort of origin to it. Then there are P shares, which are listed on Hong Kong exchange, but have origins in sort of